guys, welcome to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So today we'll talk a bit special about money management because one of the subscriber did ask me about my money management. So I'm gonna tell him about how I manage my money, how I trade. Alright, so I'm giving you a few examples right here. So actually I learned this about this money management from my previous guru, one of the guru. Alright, so because it makes sense, I'm sticking to it, but I have to have a disclaimer over here because I don't trade like other people, and this is how I trade because different people have different kind of psychological emotion, right? So this type of trading suits me, so I'll stick to it. All right, so let's start. So first of all, let's assume that we have a capital of 1,000. All right, 1,000. So usually I will not risk more than 5% of my capital. All right, I won't risk more than 5% of my capital. So here is an example of the risk in terms of money. That will be $50. All right, means that the first trade, it will be $50. Okay, because I control my lot size according to the risk in dollar. Okay, so example right here is that let's assume that one of the trade, okay, that is only 10 pips of stop loss. So the lot size will be around, okay, because different kind of currency pair, they have different kind of calculation, right? So I hope you guys agree with me. So this is just an example. You need to do this kind of calculation yourself. So the lot size here is 0.5. Okay, so let's assume the same kind of currency pair, but this time the stop loss is 25 and my risk is still 50. Then my lot size will be 0.2. Hope you guys understand, because how I control is that I control my risk in dollar over here. That's why if you look, I won't expose my history. If you able to look at my history of trading, I have different kind of lot size. Okay, sometimes it will be a bit bigger, sometimes it will be smaller. Okay, it is because I control using my stop loss zone. Okay, if my stop loss zone is bigger, my lot size will be smaller. Then if my zone is small, then my lot size will definitely be bigger. So you have to understand this first concept. I control the risk not more than 5%. All right, what do I mean not more than 5%? Means that variable, usually I will change to 3, 4, or 5, depending on the kind of setup. Okay, I'm gonna put it right here. Type of setup that I gonna risk higher is first one is obvious QML, MPL, zone. So some of the trade or some of the charts analysis, you can get a very, very obvious QML, MPL, and zone. So that kind of setup, I usually will have bigger risk. Means that 5% the maximum. By the way, when I say bigger, means the maximum 5%. I won't go over that. So the next type of trade that I will go into more is compression or CPLQ. Means that compression liquidity. Means should I say compression plus fake out. So this type of trades, I will usually go higher. All right, other than that, if I felt that there is some trade 50-50%, let's assume some of the trade that is only 50-50% to me, usually I won't go in at all. Okay, even though it's so tempting, I won't go in at all. I need to control myself. Right? You have to remember one thing. I always repeat this sentence again and again. To win is not to lose. So you have to remember that if you want to win a trade, you must not lose at the first place. You must prevent yourself from losing. All right. So the second type of trade that I will go into 3 to 4% is that I felt that that is only 70% of my winning chances. Okay, 70 to 75, I'll say Then I might go into 3 to 4, evaluate how big my risk reward is. You have to understand. Sometimes let's assume that I have a chart over here. Let's assume. So I make a sell at this point. Right? So, but I already identified my take profit zone. It's only at this area. Right? So I'll be risking this type of zone, and I only get this. Means that my risk reward is maybe will be only 1 to 3 or 1 to 2.5 or something bit less. So I will go into smaller lot size, or smaller risk, or should I say smaller risk. Alright, so that's how I control, and I have my own rules. Same with you. So let's come back to here. So what happens is that if you lose the trade, this is the losing trade. So let's say the second trade, after the first trade you lost, then your capital will be $950, right? Then that time, understand the risk, okay, the maximum risk will be only $47.5. Okay, this risk is according to the current capital. Hope you guys understand. Okay, and then things goes on. If you lost again, then your risk will get lower and lower and lower accordingly. It's not emotional. You have to have a rational mind and think about this. This is very, very important. So now let's talk about the positive thing. This is a negative. Let's talk about the positive. What happened if you won? Alright, so if you look at the difference, first of all, my risk reward is always bigger. Means that I won't risk one, let's assume $50. I won't risk $50 to gain $10 or $20. That's definitely not my style. So if you have been with me, you know that some of my trade will go until 10 times or 12 times, means the risk reward ratio. Alright, so let's assume it will be only 5 or 4, okay, to be more realistic to you guys. Let's average it out. So if you look at it, imagine that the first trade I've won 1 to 4, means that $50 become 200. So my capital this time will be 1,200, right? If you look at it, now my current risk will be $60. I already upgraded, right? Then what happens? Then what happens is that if the price, if I still gain some more, okay, my risk is still the same. Can you see the percentage is still the same? It's just that the risk in terms of dollar increase. Okay, this is what we call it as a technique. This technique is called compounding, correct? This technique is called compounding, and you should know this technique because bankers has been using this kind of technique. All right, imagine that you borrow money. Simple. You borrow money to buy a car or a house from the bank. The bank is using this technique to increase their profit from you. All right, from your loan. So you have to understand this thing. So the next question will be usually, how many times do I enter a trade? If you can see, some of the people, they enter quite a lot, irrationally, I'll say. No, actually not. It's not really irrational. It's just that different people have different style of trading. So this is my style. But usually the maximum, the most time that I enter a trade on a single movement is 6 times. That is my most maximum. All right. But how do I enter? I'm gonna explain a bit over here. So what we have right here is a QM sell setup, right? So this will be the QML, the left shoulder. This will be the right shoulder. Hope you guys agree. Then we are looking for a sell at this point. Correct or not? Then what happens is that I will place, of course, my biggest trade over here. Okay? Or we call it the anchor lot. I will usually place my 5% anchor lot at this point. So what happens is that when the price went down, okay, and then when it comes back up, all right, when it comes back up and I saw an opportunity like the SBR over here, let's assume that it's a SBR opportunity right at this point. So this will be my second trade. But this time the trade the lot size will be only a maximum 25% of this lot size. All right, let's assume this lot size is 1. Okay, easier for calculation. This will only be maximum 0.25. Okay, reason is that when this movement down, I know that I'm in a gain or in a profit position. So what happens is that when I place this trade, I will have my stop loss. Okay, I will have my stop loss somewhere around here, depends on the chart analysis. Okay, for the second trade, and my first trade, I will have my stop loss at this point too. Same position. Means that if my analysis fail, all right, analysis fail, and it went up and stopped out my second trade, my first trade will be stopped out too. All right, then what happens is that, am I losing or winning? Winning, I still gain. If you know how to do a calculation, I'm still gain. All right, so this is one of my way of trading. And then, of course, when the price keep going down, then I'll place my trade more and more and more and more, all the way until my final take profit. This is one of the way you have to know. So the easiest way, chart or easiest setup that you can do this one is compression. All right, because compression, they destroy, or should I say consume its own supply or demand zone. Means that along the movement, you know that it will drop. There is no more supply or demand zone right there. So it's very easy for you to add on trades. But my maximum to me, I can take is only 6 trade or 6 different order. That's all. End of the story. All right. Hopefully you guys understand this. So this is how I trade and how I control my risk. All right, so hope you guys understand, and I answer one of the subscriber question over here. So I'm gonna make some more videos for you because today is weekend. I'm a bit free because I don't need to monitor the market. So see you guys in the next video, and if you guys like my video, please do subscribe and give me a like. Thanks and bye.